Christine Short. She's head of research at TMX Data Links. Christine, it's great to see you.
Thank you so much for having me.
Yeah, let's talk about where we stand at this moment through the earnings cycle.
Yeah, so like you said, we're past the halfway point. About 64% of S&P 500 companies have reported at this point, and it's been a really great season. And I know it's backwards looking. However, we reached growth as of Friday of 10.7% with those 64% of companies. And of course, there's estimates for those that haven't reported yet. And this would be the fourth consecutive quarter of double-digit earnings growth. Revenues are almost at 8% growth. So it's been a great season, certainly fueled by some of those Mag 7 names we saw last week: Alphabet, Microsoft, Amazon, Apple. Meta, although they did beat on the top and bottom line, investors sort of soured over some of their CapEx predictions for 2025, but still it was a great report. And like you said, we'll get more of a read on AI names when we have AMD this week, Qualcomm, and then we're all waiting for NVIDIA, which doesn't report till November 22nd and sort of wraps up the season. But still some exciting AI reports to come, which, investors think will drive earnings even further.
Yeah. Is there anything in particular that our viewers should be watching for when some of these AI names start to report, and what companies, the C-suite in general, is saying about their investments in this technology?
Yeah, I think like we saw from Meta last week, what investors want to see is that those investments are paying off. And I think they felt with Meta, the revenue growth just wasn't there yet. They might be a step or two behind some of those other names. But when you looked at Alphabet and saw Google Cloud growing 34% based on those AI investments, that's being used to build the AI infrastructure and some of those generative AI tools. Same with Microsoft, Azure up 40%. And then Amazon, there was some, queasiness going into that report. Had AWS kept up, but of course that came out with great numbers as well. So investors really want to see those investments are paying off. And we've seen them react differently in the past. When companies reported big AI investments, they rewarded them. But again, it's as we were kind of ramping up, and now it's they want to see the proof is in the pudding and that some of those AI investments are paying off. And so that's what investors are going to be paying so much close attention to.
We know that guidance often can move a stock price even more than earnings results at times. Any takeaways on the guidance front, as uncertainty seems to be in some ways still the theme of this year?
Yeah, we've heard CEOs mention caution and uncertainty, yet we've seen guidance actually tick up. Guidance has been very impressive for Q4 and even into 2026. And I think they're just operating under the environment that they currently have. They kind of know what to expect right now from tariffs. That was a big fear coming into this year. A lot of companies have said they've dealt with it through a multi-pronged effort, whether that been negotiate with suppliers, move production, pass costs on to consumers, as we know many of them have. And so far it's been working. If the picture does change, they'll have to reiterate on that. But so far companies have been giving pretty positive guidance. And I know that spooks some people because there is, is there a bubble? How could it be this good? There's still, like you said, so much uncertainty out there. But again, they're operating with what they've got right now. One thing, as you've mentioned in your kickoff here, is the employment numbers. And that's something that we're going to be keeping an eye on. They have been softening. We would otherwise get NFP later this week. ADP has stepped in and said on Tuesdays they are going to release that rolling 4-week estimate of private payrolls. So we'll be looking out for that tomorrow just to get an idea. But that's one piece. We don't have all of the information that we typically have. And so companies are operating maybe with less information, which makes it a little more difficult.
Mm-hmm. What does this all mean for investors?
Well, look, investors have, need to be, as always, tuning into what companies are saying, both on the earnings calls as well as we track corporate earnings events. So investor days, analyst days, you really need to be listening in to what's happening more than ever because, in some other ways, you're not getting as much information as you were typically from the government, from the U.S. Labor Department. And so let's listen to what CEOs are saying, what they're seeing. Of course, what they say varies. You've got a Jamie Dimon who tends to be very cautious, and he sort of sounded the alarm beginning of the season, but then we've seen that tone soften a little bit as that AI demand has really driven, and it's still quite concentrated. As you know, the 5 companies that reported last week really drove earnings growth, but we still saw some great numbers from some energy names, from healthcare. So overall, 83% of companies have beat estimates. They haven't beaten by as much as they typically do, only by about 5.3%. But you have to remember, we came into this season with a very high number. Remember, analysts didn't budge. They actually increased earnings expectations heading into the season, which is not typical. They haven't done that since 2021. So the bar was very high. Companies are still passing it.
So is it fair, Christine, then to say that the strength is broadening out beyond just those Mag 7 names, which we know have fueled a lot of the stock market gains?
Yeah, I think they still have fueled most of the growth. However, big banks came out very strong. Then, like I said, you've got some pharma names just because of blockbuster drugs. We saw Eli Lilly last week. We saw Merck with their Keytruda drug. So pharma has been doing well, even hospital providers, some big energy as well. So even despite lower oil prices. So you're seeing a broadening out, but there's still, if you take out those big tech names, the growth rate would drop by about half. But we're still seeing some pretty decent beats from other sectors.
So AI obviously is the clear focal point, I think,
Absolutely,
has probably been since late 2021. I think that's when ChatGPT first debuted by OpenAI. But I'm just curious in terms of the state of the consumer. I know you referenced banks, and obviously Jamie Dimon will talk openly about the state of the consumer, knowing that consumer spending does drive 70% of overall GDP. Any more that we can glean on the state of the consumer from these results?
Yeah, so we really get retailers not for another few weeks. I'd say the ones that have reported thus far, Nike always kicks off the season pretty early, and they did talk about their multi-pronged approach to dealing with tariffs, to dealing with consumer softening. That's a brand that, has struggled over the last few years, but they were having some success in slightly raising prices and with innovation. Overall, again, we don't have the full picture of the consumer because we don't have labor data, but if you look at something like the National Retail Federation's expectations for holiday shopping, which is coming up, most families are expecting to spend more. Those with children are expected to spend $33 more this holiday season versus last year. So the consumer is still quite resilient. Given the overall labor picture, we know that back to school spending was a record once again. So, we've been saying this for a while. The consumer is resilient, and we think they're going to get bogged down at some point by inflation. They have continued to spend, so we're going to wait for more clarity from the retailers, but it seems like they've moved up a bit. Consumer discretionary was expected to be a laggard coming into the season, negative 2% earnings growth. They're now at 8% positive year over year, and that's some of it due to analysts raising estimates, but also with how some of the names like Amazon's in consumer discretionary, like a Wayfair, like some Booking.com, we've seen travel continue to happen, so there are still some winners within the space.
Christine Short, Head of Research at TMX Data Links. Christine, thank you as always.
Thank you for having me.
Great to have you.